As a financial analyst of a large electronics company, you are required to determine the WACC using book value and market value weights. We've been given information about the company's capital structure, and at least for the first part of the question, I'm just going to modify the table that we have here and go about solving the sum. Alright, so what we can do is treat this as amount. Okay, obviously in the exam you're going to draw the table from scratch. Alright, we have amount, we have weights, we have cost, and finally weighted cost. Weighted costs. And simply extend this table all the way clear. Calculation of weights is very straightforward. Whatever we have, for example 8 lakhs divided by 20 lakhs into 100. Okay, so the logic is very straightforward. Amount upon total, and whatever you get, you write it as is. Okay, so 8 lakhs upon 20 lakhs is going to give you 0.4. 2 lakhs upon 20 lakhs is going to give you 0.1. 10 lakhs upon 20 lakhs is going to give you 0.5. And therefore we know the total anyhow has to be 1. And you can add it up and you realize it's going to be 1. So I'm done with weights. I now need to calculate cost. Okay, and I have debentures. And looking at the question, they have told us that there is a market price for the debenture. Okay, and under normal circumstances, I would have considered this to be the issue price. But read further. They're telling us that 100 per debenture redeemable at par. So redemption value is 100. Okay, number of years is 10. Interest rate is 11%. Okay, and we have 4% flotation cost, but a sales price of 100. Now, the moment they tell us the sale price is 100, that means the issue price is going to be this number over here and not that number. Now, going forward, we need to calculate KD. Okay, and if you remember the formula for cost of debt for redeemable debentures. How do I know it's redeemable? Because they are saying that the maturity is of 10 years. If no maturity period was mentioned, then you could have used the irredeemable debentures or debt formula. KD is equal to I, open bracket, 1 minus T, plus RV minus NP upon N. The whole thing upon RV plus NP upon 2. Now, I've told you all before, and it applies to all sums, whether it is cost of debt, cost of equity, cost of preference, your net proceeds, it's always going to be issue price minus flotation cost. Okay, so we have interest at a certain rate, which is 11%. If I want to calculate interest, always remember interest is equal to interest rate into face value. So in our case, it is 11% into 100, which gives me 11. So I'm going to write down 11 over here. Open bracket, 1 minus the tax rate. Tax rate is 35%. And 35%, okay, 35% I'm going to do on the calculator. 35% means 35 upon 100, okay, which gives me 0.35. Right, so I'm going to write 1 minus 0.35, close bracket. The redemption value, they've said specifically, okay, that it is redeemable at par. So at par means whatever the face value is, which is mentioned here, and again it's mentioned over here, whatever that face value is going to be your redemption value. So we have 100. Now the question is, what about the net proceeds? They have told us that they're selling it for this price, but we also have a flotation cost, and the flotation cost is 4%. Alright, so we have to take 100. Okay, so we want to know the flotation cost in absolute terms. We multiply 4 into the issue price, which is 100, so we get 4. Alright, so your net proceeds, if we had to do the math, okay, and I'm going to do it down here, net proceeds is going to be 100 minus 4, which gives me 96. Okay, so redemption value minus net proceeds divided by number of years. Okay, and they're saying the maturity is in 10 years, so I'm going to divide it by 10, and then I'm going to take the full amount and do RV plus NP upon 2. Now, students struggle with BODMAS, therefore I'm going to go step by step and simplify this until we get a final answer. Remember, BODMAS is important. BODMAS. That means the first thing we need to deal with is the bracket. Solve inside the bracket. Again, keep in mind, this is also technically a bracket. Wherever you see plus minus under which you've got some form of division or multiplication, okay, they all involve brackets. So our first job is to simplify all of them. 1 minus 0.35, please do it on the calculator, you will get 0.65. Okay, then 100 minus 96 is going to give us 4, which by the way is still being divided by 10. The whole thing, 100 plus 96 is going to give you 196, and the whole thing again is going to be divided by 2. So brackets done. There is no off word in this question. Next step is division. Okay, so we have 11 into 0.65, which by the way I could have done it here directly. Division and multiplication you can do together. Okay, but just because I'm strictly following BODMAS in only this sum for you all to get the logic, I'm going step by step. Okay, 4 upon 10 is going to give me 0.4, and 196 upon 2 is going to give me 98. Okay, solving further. 11 into 0.65, do it on the calculator. We have 11 into 0.65, which gives me 7.15. Alright, so 7, okay, we have 7.15, which now looks after one part of the multiplication. Okay, and you would ask, okay, there is already division over here. Okay, there's such a huge division, why am I not doing that first? Because we have a plus sign in between. Alright, so you first need to finish solving. What's on top over here. So only then we can go downstairs. Right, so we have 7.15 plus 0.4, which is equal to 7. Okay, and keep in mind we are still being divided by 98. Okay, which is equal to 7.55 upon 98. Okay, and finally we will get a decimal answer. So, okay, plus 0.4 gives me 7.55 upon 98 gives me 0.077. Okay, and I'm going to take it up to 4 decimal places with rounding. Now 4 is less than 5, so it's just going to be 0.770. Right, so we have 0.770, which if you multiply by 100, you can convert it into percentage and you end up with 7.7%. Alright, so I have 7.7%, and going back into the table right here, I'm going to apply 7.7% to KD. Now, my next step is to calculate KP. Alright, and I'm going to continue doing this here. I'm going to let BODMAS remain because we're going to have that come up again. And remember, in the question, we've been told that there's a maturity period for preference shares. So that means we are again dealing with redeemable preference shares. The formula for redeemable preference shares is KP is equal to PD, preference dividend. Remember, no tax benefit. So there will be no 1 minus T. We directly go to RV minus NP upon N, redemption value minus net proceeds upon number of years, divided by redemption value plus net proceeds upon 2. Now, looking at the question, again they're saying the sales price is 100, but this time the flotation cost is 5. So that means my net proceeds is going to be 100. Okay, minus 5% of what? 5% of 100 gives us 5. So 100 minus 5 gives me 95. And they're saying it's redeemable at par. What is the face value? 100. Okay, so we have information as far as the redemption value is concerned, net proceeds is concerned, number of years they've told us is 10. Okay, now the only thing left for us is to look at the preference dividend rate, which by the way is mentioned here. Normally they also mention it on top. Okay, normally they will say 12% preference shares. They haven't done it this time, no problem. They've told it to us downstairs. Okay, so they've told us that the rate of preference dividend is 12, and the same logic applies that we apply to the interest rate. So if I want to know what the dividend is, okay, dividend is equal to the dividend rate into face value. So we are talking about a dividend rate of 12% of 100, which gives me 12. Okay, so I have all the data I need. Okay, and let's see if I can fit it in here. 12 plus RV is 100. Net proceeds I've calculated as 95. Okay, only this much is divided by the number of years, which is 10. And again, we go as 100. Okay, 100 plus 95 upon 2. Okay, simplifying this further, we deal with brackets first. Okay, so it's going to be 12 plus 5 by 10, the whole thing, 195 by 2. Okay, and simplifying this further, we're going to get 12 plus 0.5. Okay, if you have doubts, always use a calculator. You're allowed a calculator, don't unnecessarily try to do it mentally. You're not here to impress anybody. 195 upon 2 gives you 97.5. Okay, so you have 97.5, and finally we end up with 12.5 upon 97.5. Okay, and doing that on the calculator, 12.5 upon 97.5, let's see how much we get. 12.5 upon 97.5 gives us, and again up to 4 decimal places. So if we've got a 0 over here, we can't do anything with it. Okay, so we have 0.1282, 0.1282, and multiplying this into 100 gives us 12.82%. Okay, and I'm going to go back up here corresponding to preference shares, and I'm going to write down 12.82%. Now, next we have equity shares. This time around, keep in mind the face value is only 10. Let's see what other information we have for equity, because we have 5 different formulae to use for KE. It could be the dividend model, dividend growth model, earnings model, earnings growth model, or the capital asset pricing model. You should know all 5 formulae, and depending on the question, decide which one to use. They're saying that the equity share has a 2 per share flotation cost. 2 per share flotation cost, sales price is 22. Okay, so this time there's no rate for flotation cost directly. They've told us the amount. So if I want to know the net proceeds, it is my issue price minus the flotation cost. So I'm getting 20 if I sell the shares. Okay, so I'm getting 20. And anything else they've told us, the dividend expected on the equity share at the end of the year. What's important here is dividend expected. If it was last year's dividend, then we would have to take the 2 rupees and add the 7%, which is growth. That means if I wanted to know this year's, it would have had to be D0, which is last year's dividend, is equal to D1, open bracket 1 plus G. Okay, and you would literally have to do, you would have to take 2 and open bracket 1 plus 0.07 and solve forward, which does not happen in this case because they have directly given us the coming dividend, next year's dividend. They have directly given us D1. Okay, so they're saying D1 is 2 and 7% is growth, G. Alright, so we have enough of information to apply the dividend growth model. Okay, so remember, if we were to calculate KE using the dividend growth model, formula is dividend per share, okay, upon net proceeds plus G. Okay, and when I say dividend per share, I mean next dividend, which we can also write alphabetically as D1. So D1 upon NP plus G. And we know that D1 is 2. Okay, we have identified D1 as 2. We have identified NP as 20. And we have identified G as 7%. So 2 upon 20 plus 7%. And now we simplify it further and convert everything into decimal first. 1 is a fraction, 1 is a percentage. Put everything into decimal first and then later we'll see. So 2 upon 20 should give you 0.1. Please use a calculator. 7% is going to give you 0.07. How do I know that? On the calculator you take 7 because it's percent. You end up doing 7 divided by 100, which gives you 0.07. Anyway, my final number here is 0.17, which if multiplied into 100 gives me 17%. That means KD is 17%. Okay, and now comes the fun part. We multiply weight into cost to get weighted cost. Alright, so okay, let's stick to standard. We have 7.7. I'm not going to make use of that percentage button at all. Simply 7.7 into 0.4. Okay, into 0.4 gives me 3.08. So I'm just going to write down 3.08. Now, okay, we do it again for 12.82 into 0.1. Okay, which gives us 1.282, and I'm going to write it as it is, no matter. Okay, if it's a non-terminating decimal, which won't happen because you're simply multiplying weight into cost. How many ever decimals are there? Write it down. We will see later. Next, we have 17% into 0.5. So 17, only 17, don't press the percent button, into 0.5 gives us 8.5. Okay, now that I have all of them in place, I'm going to add them all up. Okay, so I already have 8.5 on the calculator plus 1.282 plus 3.08. Okay, which gives me 12.86, and 12.86% is my WACC. And it's not just good enough you put it in the table. You have to say, therefore, okay, and I'm just dictating. Please write it down in the exam. Therefore, the weighted average cost of capital using book value weights is 12.86%. Now that we are done with this portion of the question, the next part deals with market value weights. So I'm just going to take a part of what we have over here, okay, because this is going to remain more or less the same. Okay, so we are down here and we're going to rebuild this table and see how do we incorporate market value weights. Will the amounts be the same? No, the amounts are not going to be the same. So I'm going to take out the amounts and then we shall do the math. Okay, obviously we do not bother with face values this time around. Okay, even if it is there, I mean in the question, you do not need to write it as part of your answer for market value weights. Right, so we have the first one, okay, which I never wrote down the title for, okay, and remember it's from the beginning, calculation of WACC using book value, useful forms, book value weights. Now, what we are going to do, okay, is going to be calculation of working average cost of capital using market value. Okay, so we have amount, we again will have proportion, we will have cost, and we will have weighted cost, right? And again, yes, I know I'm not an artist. Okay, please bear with me. In understanding is more important than aesthetics. Alright, we have to think of the amount. Alright, and the way in which we do this. Okay, so to calculate amount, market value amount. Okay, so market value amount is equal to book value amount, book value amount right, it's equal to book value amount, and we divide that by face value and multiply it by current market price. Okay, remember, market price. Alright, so let's go one by one and see what these numbers are going to be. Alright, I'm here. We have in the case of debentures 8 lakhs. Okay, so 8 lakhs is a book value amount. Our face value is 100. So 8 lakhs upon 100 multiplied by, okay, and multiplied by the market price. So the market price of debentures given to us in the question is how much? 110. This time around we use this number. Okay, so we multiply it into 110 and we get ourselves 8,80,000. So corresponding to debentures over here, I'm going to write down 8,80,000. Now, what about preference shares? I'm going to follow the same logic. So that means it's going to be this divided by this multiplied by this. Okay, so we have 2 lakhs upon 100 and multiplied by 120. So we have 2,40,000. Okay, so we have 2,40,000, and then we have equity shares. 10 lakhs upon 10 multiplied by the market price of the share, which is 22. So into 22, which gives us 22 lakhs. Alright, so we have 22 lakhs, we have 2,40,000, and we have 8,80,000. We add them all up to get the total. So we have 22 lakhs plus, okay, plus 2,40,000 plus 8,80,000, okay, which is 33,20,000. 33,20,000, and once again we calculate proportion. So remember, proportion is equal to individual amounts divided by this into 100. Okay, and since they are not so straightforward, I too shall use a calculator. 8,80,000 upon 33,20,000 gives me, okay, and imagine such a number, 0.2. okay, we have 0.2650. Alright, so maybe up to 4 decimal places. So I'm going to round up the 5th number, which is 6. So I'm going to have 0.2651. Okay, so 0.2651. The next we have 2,40,000 upon 33,20,000. Remember, all of you all have the benefit of using the shortcut on your normal calculator where you do 1 by 33,20,000 into, okay, and then you can solve one by one, okay, one line at a time. And again, I don't have that benefit here, so I'm going to do them manually one after the other. We have 2,40,000 upon 33,20,000, which is equal to 0.07228, and that will round up and therefore we end up with 3. 0.0723. 0.0723. Then the next one we have 22 lakhs. Okay, so that's 22 lakhs upon 33,20,000. 33,20,000, which gives us 0.66265, and therefore I'm going to write it as 0.6627. 0.6627. Keep in mind, if your final answer varies with the answer in the solution, even then you do not have to worry, as long as yours is more accurate. The more the decimal places you take, the more correct you are likely to be. Now, one way to make sure that these numbers are proper is if they are either equal to 1 or very close to 1. So 0.2651 plus 0.0723 plus 0.6627. Okay, and I think we can, okay, it's fine, it's 1. Right, so we have a total of 1. And now, what about cost? This part is easy. We already have cost. Cost is simply going to be copy pasted from what we did above. 7.7, 12.82, and 17%. Okay, so 7.7%, 12.82%, and the last one was 17%. Okay, so 7.7, 12.82, and 17%. And again, the same logic, multiply proportion into cost in order to get weighted cost. And from the first one, we have 7.7 into 0.2651, which gives us 2.04. 2.04, which is good enough. Right, so I'm going to write 2.04 over here. Right, and okay, if you want to be very careful, you can write up to 4 decimal places and then we can look at it later. Okay, the next one we have 12.82. 12.82 multiplied by 0.0723, which gives us 0.9268, and since this fifth number is 5 or more than 5, I'm going to write this down as 0.9269. Okay, so I have 0.9269, and the last one is 17 multiplied by 0.6627, which is equal to this number, which is 11.2659, and I can write that down as it is, 4 decimal places. Okay, so we have 11.2659, and now that I have all 4 of them down, I can start adding. 11.2659 plus 0.9269 plus 2.0412. Okay, so 14.23%. We end up with 14.23%. Okay, so that is our WACC, and remember, you still have to write a sentence saying therefore market value weighted average cost of capital is 14.23%. Okay, so with that, we are done with the question. If you have any doubts, feel free to put it into the comments. Please like and share. If you're not subscribed, please go ahead and subscribe to the channel. Thank you very much.